Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, September 9th, 2022. Quick update on the charts. I'll cover the usual suspects, the ones I've been highlighting recently, and share my thoughts there. Go over some levels to watch. We'll start out with the equity markets and then hit on precious metals, crude, natural gas, and maybe that lumber trade as well. All right, remember the big picture, covered this yesterday in detail, so I'm not going to spend much time here. Just keep in mind we are still above the primary bull market uptrend line, but pinched between that and the 20-month, two of, in my opinion, the single two most important levels to watch on the monthly time frame. But again, a monthly chart, all that matters is how you close the month, and that would be the end of this month, September 30th, however we close. Also, keep in mind that, usually, if and when that once that trend line goes, that's usually in a waterfall type fashion, a big drop in the market. So, like I said, you can't write this thing off yet. I still maintain and strongly believe we're going to go a lot lower. And even when you look at this monthly chart, where I think we're going, it aligns with my target on the weekly chart as well. We have about another, from where we're at right now, if we get there, or when we get there, it'll be about a 19%, almost 20% drop, about 19% from where we're at now. But again, trying to trade that, you're going to get beat up if you're just positioning short and holding out. You're going to get beat up on these bear market rallies. And again, there's no guarantee that that must happen. It's still, the most likely scenario. Let's just zoom down to the shorter term charts and take a look at what is happening. So far, support held. I had a level here. That was the old second target there. And it really, I would move the line lower, but I'm leaving this here just for reference. Oh, that's on SPY. I'm sorry, that was the S&P 500 we were looking at here. But there's the nice support right here, about 390. Remember, that was that area there where we had resistance, and that's what we pulled back to, and that was a case for going long recently. And again, you see it better on the daily chart there. All those reactions right there. There's this 389.71, so call that 390. Uptrend line support. Again, this was just a couldn't pass up, long opportunity. A big impulsive drop down to support with positive divergences. But here's what I want to show you. Look, I gave you some levels we're at right now. We're at those same levels we were this morning. The near-term bounce targets on QQQ, but a couple things going on. You have this PPO curling up here. I don't know if you can see it in the video. I'll stretch it out here, and you can. There's the PPO line curling up, and the signal line, the white line, is a great trend indicator. I have a line here at a negative 0.64, give or take. You could move it a hair lower and see that white line. When you are above that line, you are in a bull trend, and when you're below it, we've had two big legs down in the bear market so far. This one right here, and that was marked by that, and then this right here. And right now we're above it, so you need to respect that, or at least acknowledge that. And again, that is more of a trend indicator relevant to 401k, long-term swing traders, or trend traders. You know me, I'll game those intraday charts. Give me a rally or a correction, and I like to game the little squiggles, the zigs and the zags on the way down. But I do want to point that out because that could have longer-term bullish implications if we can solidly take out these trend lines that we're at right now. I'm going to get to in a second. And then remember, we already hit my initial bounce targets when we reverse off the low was right here. 200-day moving averages and the downtrend lines on SPY and QQQ, and that's what we did so far. And so we could move back up, run at that trend line again. It's been the downtrend line off the highs since the S&P 500 peaked around the beginning of the year. And we've had three distinct rejections on it. We are in a downtrend. But again, I just want to point out that if we can pop these trend lines we're at today, there may be more upside. Because remember, you have this going on that I just showed you. And then you come down to the 60-minute chart. Let me put a trend line on here for you real quick. There's the uptrend line off the highs right there, the same one that I just had on the daily chart. But you have this near-term downtrend line as well. So this is a more significant, what I call the primary downtrend line, because that comes off the highs. This is that near-term downtrend line So you have it here on SPY. I gave it to you on QQQ and NQ today and the last several days, but that's it. So we are at downtrend line resistance. So I maintain what I said earlier. I think the odds are good for a reaction, a tradable pullback. Where to? Well, you've got support right here, 401.33 on SPY. I'm going to get to QQQ in a second. I figured I'd spend a little time here because you might prefer to trade SPY or ES, the stock S&P futures, but also more importantly, a lot of people do, and a lot of institutional traders do. This is more considered the stock market than the Nasdaq 100 because it's more diversified. And so there's your potential pullback targets. 401.33 is where I have that first level, and then there's a gap just below, and they probably would overshoot that. Hard to say, but it wouldn't surprise me to see them overshoot. We'll call it a pullback target down to 430. How much would it be if we get rejected here? That's a drop of about 1.16 to 1.4. Yeah, about 1.4%. Possible we pop through here and keep going, but very unlikely. From my experience, this is a pretty extended run just to get there. It's overbought here on the 60-minute chart. You can see we're at overbought readings. The last time we were overbought was here. Now, overbought can and often does become more overbought, but when you have an overbought rally into pretty significant resistance, look, this isn't some magical trend line I sniffed out. These are pretty they should be obvious to most. And again, that's SPY. Let's get to QQQ in a second. But remember that, the case that we could rally more, I reversed. I'm short now. I took profits at those targets this morning, and I think we'll get that pullback. But remember, there was a pretty strong case, bullish case here, and sentiment got pretty darn bearish. And then, that means a lot of folks were shorting and buying SQQQ and shorting the SPY and the Nasdaq 100 and all that. And they're getting roasted right now. And that's why you have this big move up, especially today when they saw we popped this level. And so I just wanted to say this divergent low, the 60-minute divergent low, has the potential to carry us more, but my guess is at very least if it does pull back, then go on power and just watch for that. If we take out not just this trend line, but all of them. Okay, what's all of them mean? Well, that's SPY, the ETF that tracks the S&P 500. It's going to closely mirror the futures, but sometimes they have a little bit different levels. But there it is. There's your downtrend line. Now you can play with this downtrend line. You can put it in right here, and we're right on it. You can have it here. Depends where you want to catch these reactions along the way. I would say that's it. We're roughly there now. I just showed it to you on SPY. We could go up just a hair more would be nice, because then you have this 407.250 resistance right there. See that reaction high, previous reaction high. And if they pop that, here's my thoughts. I don't think they're going to run right through here, but if they do, at best, I see a run up here at about that 4109.50-ish resistance. That's a big level too. And then a back test, or possibly even a failed breakout. If we get rejected here, which I prefer, I think come down here, you can see very nice support there, about 40.18, and intersects with that uptrend line right here. So there's your pullback targets for ES, and again, potential scenarios and levels to watch. All right. NQ, the Nasdaq 100 futures, slight overshoot, but again, it's how you draw this trend line. If you look closely here on this chart, you can see two spikes right there. These are the top of these candlesticks, the skinny part, the shadows are right there. So if I were to come on there on that trend line and catch those and come off the high here, then this is what that trend line looks like, and we're right there right now. So again, trend line drawing, I always say, is more of an art than a science. And if you want to give it the benefit of the doubt, then that's what you do with the trend line. You take the highest points. I like to capture the level that has the most reaction. So what I did on that one, I captured the bodies, the fat part of the candles, and it also allowed me to capture some of these. But again, give or take, we're right there. So and we're talking a fraction of a percent. So we're just a hair above the trend line. Now we did power through that resistance, but remember, this is why I cover multiple indexes, even if I'm only trading one, because NQ traders see this breakout, right? They see the breakout above price resistance at 12,473 and change, and they see the breakout above the trend line. And so they might be buying that breakout or staying long. but they're not paying attention to, or I'm just assuming they're not paying attention to what I just showed you on SPY. So if the SPY traders and ES traders and the institutional funds, they start dumping or shorting, then that's going to cause this breakout to fail. And then those NQ and QQQ traders that took this are going to get, they'll be stopped out. They'll have to sell they'll see the breakout fail. And then there's your pullback target right there. Okay, so again, near term, a favorite downside, even if we go a little more, and this is fine to see a little carry through. It's called a momentum fueled overshoot. That, anyways, I think it risk reward for the very near term favors being short right now. Okay, so I showed you NQ, and remember that's the hourly candlesticks, but zoomed into 1 month. This is it on a 3-month, and this is that's that same. I just zoomed out a little further. So there's your downtrend line, price resistance, but we have ES at even better resistance right now, and that's why I think this breakout fails. There's that neckline for that old head and shoulders topping pattern. You extend that, you also have that coming in a little bit overhead as well. But remember, we're coming off the heels of big positive divergence. The last time we had this strong of divergence on the NASDAQ 100 was back here, and we went long on that, and that was the catalyst for that big rally. What was it, 20 something percent? 25, 24% rally in NQ off that divergent low. So in other words, you need to respect this, but we're in a bear market as I start, or at least I'm going off that theory. So right now, like I said, I'm more interested in now covering those longs and shorting this rip. We're also getting close to overbought. Small use. Let's look at the small caps. RTY. This is a 60-minute chart as well. 60-minute candles, 3 months of price history. There's your downtrend line. You want to pull it in tight, you can do that right there. And that's going to come in and catch these reactions. Just clip off the top of that little spike there, that candlestick wick or shadow, and then you're at resistance. And if you want to use the BOD, what I call benefit of the doubt trend line, that's kind of how I dragged it earlier on SPY. Or yes, that's it, what I have right there. So we're there, we're close enough, and you're also at price resistance, 1872.55. So it's been a nice run. There was our bullish falling wedge. There was a case to be made recently right there to buy the pullback to the trend line right there, go long, and then to add longs on the breakout. The breakout was impulsive, everything you want to see, but it's been a pretty healthy run. And you just look back, you only go up so much so fast unless something really big changes. And you can see this is about pretty much the extent of a sharp leg up before you get a correction. So that's RTY, small caps. And then finally, for you ETF traders, look at IWM. The Russell 2000 tracking ETF there, same story. So it might sound like I'm beating a dead horse here, but what I'm showing you is not one, but multiple indexes at resistance, and just one, if you want to say, is slightly above the NASDAQ 100. And look, now if these guys can all power through, like I said, at best they're going to run into resistance if they can break out without a pullback first. If IWM pulls back, there's a big old gap right here to be backfilled. Traders will first likely step in at the top of the gap, and then if that gap's entered, then the bottom of the gap. So those are potential pullback targets. It would be, for the bullish case, that would be better to see this now. And what it does, it helps to reset the oscillators, the overbought conditions, work off some of those near-term overbought conditions, and then set the stage for a more lasting breakout. But if we do break out now, like I said, my guess very strongly is the upside would be limited, because we'll be so overbought at that point, and then that'll cause either a false breakout or at least a back test, a reversal and a back test of the trend line. And 190 is pretty big resistance on IWM. But yeah, I'm comfortable short now, and I'll stay short on that breakout because like I said, it has minimal upside, and I don't think it's going to happen. So we'll see. And sometimes it does, and sometimes you keep going, and that's what stops are for. And I usually just will start when I realize that, hey, the charts have changed and I'm wrong. I just start scaling out. I'll just start layering stops pretty tight. above. I'll usually try to place stops tactically. That means above resistance levels, but just to the point where I think if the market maker is going to try to run the stops with a stop clear and pop, then I'll avoid that. Sometimes wait for a solid 60-minute close. Sometimes they pop it intra-period only to see it reverse. That's just kind of a little trading strategy tip there. All right, so you have my pullback targets, at least minimum, looking at about a 1% pullback. And, if you're an active trader, trade futures or leveraged or the leverage ETFs, most of you will take that in any given day. And, we could quite possibly be more. And very possible, too. I always talk about everything's possible. But probabilities, there's a decent probability that this is just the end of a bear market rally. You take that wedge right there on IWM, you take the widest part of the wedge, that's your measured target. We've already met and exceeded that. And so maybe this is it for the bear market rally, and the next stop is, my longer term targets on the weekly charts that we go and take out the lows. So we'll just, like I said, we'll take it day after day. That's why I do these videos each day. That's why I post charts each day. As I often say, the charts are dynamic, and so is my analysis. That means the charts are changing on a constant basis. There's developments that come out, and therefore, I'll have an overriding longer term bias, but near term, that's going to kind of ebb and flow with whatever the charts tell me. All right, enough on the markets. You guys know the levels to watch, the developments to watch for, where we're at right now. Let's talk about the energy trades, crude and nat gas. We've got, let's just go to that 1 year chart right here on CL crude futures. Okay, so what we've done is CL has popped back above there. I'm not crazy about that. I had the line at about 85.12 and we're at 86.13. So you're talking just over 1% above there, and but we are at that downtrend line right there. So we're back testing that. So like I said, there was and still is positive divergence. There is a potential for a bear trap, but like I said this morning, I got a chart out to you, and I'll take that all day long. I'm still favoring drop down to that 73, 76-ish level on CL crude and a comparable level on USO. And then I think it was a 10-minute chart I gave you this morning. See, this is what I like right here. You have a nice resistance there at 80 to 619. In fact, we're exactly where we were when I got the post out to you this morning with this chart. So far, it's stopped cold there. Doesn't guarantee it's going to fail, but in trading, there's two objective times to short a security. You either short a bounce back to resistance, especially after a breakdown when you're on a sell signal like this, or you wait and short a break of support. So as I mentioned this morning, if we get rejected here, your next objective short entry is a break of this uptrend line, and then a break of $83, and then obviously a break of the recent lows. And if that happens, great. If we take out those lows, I would expect at that point, because we had a breakdown and this is a back test with a little overshoot, I think we'll start to see an acceleration in selling, some pretty impulsive selling in crude oil if that happens. Otherwise, don't get married to anything. If they take it back, you remember that this could be a false breakout, and those positive divergences on the daily could play out. So keep that in mind. And also, keep in mind too, as I'm going over the energy trades, that would be if we see a big rally in crude, especially natural gas as well, that's not going to bode well for the equity market. And that's going to put pressure on stocks, because it's going to increase the chance that the Fed will have to stay aggressive with rate hikes to curtail that inflation. And one thing I'm just looking at here, I can probably put a trend line down here, come off the highs, which it looks like we've taken out. So I'd like to see that fail. Remember, we did put in a divergent low, and so it's a break of that trend line, but rallying into resistance. You can see the next resistance. There's a little bit there, but that's even better resistance at 88.36. Maybe a stop somewhat above there if you want to give it a little room, or short here with a tight stop. And you can always get back in if they clip your stop, and then it runs back down and starts taking out those support levels I mentioned. So that's crude oil. And again, whether you're trading it or not, something to keep an eye on, because like I said, I've been trying to stay in front of the Fed, in front of the media and the masses. You want to know where inflation's going? Watch crude oil, watch natural gas, and of course commodities as a whole. All right, speaking of natural gas, let's before we move there, let me just show you USO for those of you trading the ETNs. USO daily chart right there. So you can see here, remember yesterday I covered 60, my support zone was about 69.50 up to about 71.05, and so we're still below that, and these moving averages. You have the 200-day simple and exponential pinching right there. That's these red and blue lines, and they contained it right there. So they were support on the pullback to those, and we're below now, back testing from below, and you can see on USO pretty good resistance, former support at 71.05, and so from that aspect, it's not a false breakdown yet. We need to power up above those 200s, which come right in. They come exactly in with that 71-ish level right there. So that's why I still think it's an objective short entry on USO. Then UNG, nat gas, covered that yesterday. Failed to hit this first support here on the daily chart, 27.54. Looks to be potentially bear flagging. You've got an impulsive leg down. Would be a flagpole followed by a level of consolidation that takes the form of a flag on declining volume. That's what you want to see on a bear flag. You want to see higher volume on the selling, and so if it breaks down, you're just going to take us down to my next target there, about 22.71 in natural gas, and it would do so most likely in an impulsive fashion. That's the nature of a bear flag continuation pattern. That's about an 18% drop if so, and if it plays out, you want to look for an impulsive breakdown below it. Remember, on the 60-minute chart, it's also support. There's a support zone there. You do have support there, but if it plays out in bear flag fashion, then it'll probably be very little, if any, reaction there, and shoot on down to that next target there, about 22.91, and the intersecting uptrend line. So that's nat gas, that's crude. I already gave you the chart of the futures this morning, or at least a 10-minute chart on NG, but there it is. That was just a nice, that's see that rejection off that trend line right there, and then a little wedge type pattern there with negative divergence here, and then a breakdown. Just need to take out these lows, and that's really that flag that we just looked at on UNG. So if we can build up some momentum, if we can come down impulsively, end the day pretty red today. We're green right now. It's up. The futures are up about 0.5%. So if we can turn red, and then over the weekend, when futures pick back up on Sunday night, see a sharp move down, that would be a breakdown of the flag. 60-minute chart, hourly candles, that's what it looks like. So we're still looking at the next target down here at 7.519, and as of now that one still looks good. Okay, regarding gold, I track the euro very closely, the euro US dollar pair, and to be bullish the euro is to be bullish gold for me. And right up to that level there, I had a key level at 101.149. Euros, the current forex pairs trade in pips. That means they go out to the fifth decimal there, because they move so small in such relative terms. And that's what you expect. At least a reaction on the initial tag. That's the initial tag, and really nothing that scares me here. But it's major, well, not major, but pretty big resistance. We have even bigger resistance overhead. So that's why gold's a little soft today. Not bad, but I'll get to that in 1 second. And bottom line, I want to see the euro power on through there. That's that old trading range right there. I have boxed in. That's the bottom of the trading range. So if we can get into the range, what usually happens, it's going to run you up to the top once you enter the range from below. Let me try to move that shaded box if I can grab it. Yeah, I've got a line there. There it is. That's the box, the trading range. That's where we got rejected today. And so if we can enter the trading range, first target, so the midpoint, you have a little resistance, then you'll probably work way to the top of the range. And then obviously each and every level you break out. So these are the levels. Boom, 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 boom. It just builds on the case of gold. And if that starts to happen, then we turn our focus to the weekly chart and the all-important big long-term former support, now resistance zone. Again, that's kind of longer term stuff, but I think it's a pretty good chance it'll happen. And then gold futures, GC, back testing the trend line's been a little bit whippy lately, but again, I'm letting the euro steer me to a good extent here on trading gold and silver. Remember, gold put in a double bottom low right there. It's been zigzagging higher so far. It's not really ripping yet, but it is back testing right there. And again, if the euro can power up with another leg, gold does offer an objective entry. It's still up today. It's down off the highs, but it's still up about third of a percent, 0.35. And silver, of course, is going to follow, so I won't even go into that right now. Let me just wrap up. Oh, let me show you. I said I'd do. Well, yeah, I'll get to lumber because I told you I'd do it. There it is. Lumber, remember, needs to solidly pop that 500-ish, 501-ish level. And to get up to these next targets, this was a setup here with the bullish falling wedge and the breakout, and so far so good, 7, 8, 9% run. But what I wanted to show you are the cryptos. I haven't done an update in a while there. Ethereum. These are the futures. ETH, USD, RR. You can look at a 3-month here. And remember, like I said, to be long and bullish the stock markets, to be long and bullish crypto, but for the same reasons that I, reversed on NQ today, I also took profits on Ethereum, which I'd been long because you had a nice downtrend there. There's a breakout. Well, you've had multiple breakouts. First, it started here with this positive divergence, or at least divergence there on the RSI at support. We kind of floundered around for a while, as the market did. Remember, the market was breaking out. And then we had a first breakout here, a successful back test right there, second breakout, but we rallied into resistance today. Pretty constructive, I'll tell you. This, if you look at the cryptos, they're actually, I'll go out to a longer term chart and I'll show you Bitcoin in a second. Not looking bad, so that might support the case for rallying the stock market and these guys as well. And remember, if you get the call on the market right, you're going to get more bang for your buck in cryptos, but it cuts both ways. They're just more, they're much more volatile. This is up 5% today, Ethereum futures. And if I look at let me see if I can show you. Let's see what I have here on this. If I have anything on the 6-month, nope. Let me see if I have anything on the yearly. I did before. When these futures roll, I have to redo the lines, but there was a big divergent low there. Remember, been bullish this one for a while, and then that powerful breakout of that basing pattern there. You also had an island cluster bottom there, a cluster of candles separated by gaps on both sides, and that is a reversal pattern. That is a trend reversal, not just a short-term buy signal, but a major. And you can see it on Ethereum ETHE, the ETF type instrument. There's your cluster. That is a textbook island cluster reversal pattern, and so that would be bullish. Now, is it possible that Ethereum rallies and the stock market does go down? Yeah, there was a time where the cryptos were trading inversely to the stock market. They were considered a proxy or an alternative to the stock market and a hedge and all that stuff. But throughout the year, they've traded in near lockstep. So I just want to say this chart by itself is constructive. There it is on the 60-minute chart. Just broke out of that falling wedge, but it has some resistance here, as does the stock market. But if both can power through, if the stock market can power through those levels, in Ethereum, this one has the potential to go. Like I said, the chart looks pretty constructive. And then Bitcoin, BRR, I'll show you both of them. The ETF type instrument, again, I call it that. It's not technically an ETF. Similar. This is very short term. So BRR has some negative divergence of the 10-minute. That's not what I wanted to show you. That's just showing you probably get a little pullback here today if the equity markets pull back. And don't just power through those resistance levels I showed you earlier. But it's a nice looking chart. So and again, it's not mere coincidence. It's same with the stock market. We had the same exact thing. Bullish falling wedge. Look at that double bottom there at 18,426. See right there exactly where it fell to before on this. This is a 3-month, 60-minute chart. there was a breakout, and it's been ripping since. And Bitcoin, minor resistance right here. You can bring that across, but the next decent resistance level I have is right here, 21,674, and then 22,637. Those targets are likely if the market can continue higher, the stock market, and and we're coming off a big divergent low as well. So, and then I just toggled over to a daily chart, 1 year daily candles, and this is a pretty constructive looking chart, I have to say. There's that double bottom we just put in right there, and the indicators are making higher highs against prices making equal lows. That's positive divergence. Big green candle today, and probably won't go through there without at least one more check. But on the daily chart, if you're going to swing it, we can get some traction here in cryptos, especially in the equity markets. 25 263, 28 557, and who knows, maybe all the way back up here to 35 668. That will most likely entail a pretty strong rally in the equity markets, or just a complete reversal where equities go down and all of a sudden people realize maybe they should be buying Bitcoin as a hedge. I don't know. All I can tell you is it's a pretty constructive chart, and obviously not good if those lows break, because that's support. And last but not least, you have to forgive me, I have not cleaned up this chart in a while, meaning removing some of these old levels. We've had trades here and all over the place, old support and resistance levels, but I'm going to just highlight the most salient levels. This is on the again, GBTC is an ETF type instrument. It can trade at a premium or discount to Bitcoin, but it does a pretty good job of tracking it overall, especially the trends. It's going to be if you don't trade futures or cryptos directly, this is, I think, pretty much your only option there. Might be another one out there, but this was first to market. Anyways, strong positive divergence. Look at that divergent low right there. And we took out this little minor trend line, but you have this whole area here of consolidation, a lot like Ethereum. Remember, Ethereum already broke out. So at some point, if you can rally up here to that 16,048 level right there, and then gap above it, you have the potential also for another island cluster reversal bottom, because you have a gap right there. And if you had a gap on the other side of this island, that would be a major bottoming pattern. Obviously, we're in a bear market in Bitcoin, so let's not forget that. The trend is lower. But right now, like I said, with those positive divergences, that sets up the potential for a nice rally, even trend reversal, unless we just crap out, take out the lows, and then the divergences get taken out. So, all right, you are up to speed on just about everything. Most everything out there. That wheat trade's kind of been going back and forth. Popped that 851 and a quarter again, still above the uptrend line. But I guess I'm just focusing right now personally on the equity, crypto, and energy trade. That's where I'm putting most of my eggs in my basket right now. All right, this is Randy Finney with Right Side of the Chart. Have a great day.